This is Mark Anthony with Mercury Time Price Analytics. Welcome to our end of day trading video for Wednesday, August 19th. Where do we start today? I'm pushing 60 years old and I have had more concussions than I can count. A lot of sports, a lot of stupidity. And of course, as you know, there's a cumulative effect to having many concussions. Well, here's the metaphor. You don't need but one of these that you see on the chart. This is the live chart. Traded down here to just above 50, which we've got a Mercury band there at 33.51.14. That's from the Mercury band set that was run after the 5 o'clock close tonight. The Mercury bands run all through Globex until 5 o'clock tomorrow. Does it hold there or not? I don't know. I mean, you don't jump in front of one of these. You got to wait for confirmation. I mean, second mouse gets the cheese. And after this kind of decline, you probably don't want to be even the second mouse, maybe the third or fourth. So, man, there will be repercussions here. Now, I put out on Twitter, if you go to my Twitter feed, which is MC2085, MC2085, earlier in the week, I mentioned that August 18th is the end of a key cycle off the February 20th date. Now, if you go back on the chart, and you may remember this just off the top of your head, it was a pretty eventful day. February 20th was the day that that the S&P futures hit 33.97. Major technical damage on February 20th. And that's what got the ball rolling into the end of February, into March. It's 180 days since then, and I got a lot of questions about this on Twitter. It's not the 180 days itself. The problem is that there are so many smaller cycles that, in this case, all overlap at 180 days. The fact that this happened at a perfect square out of time and price off the February 20th high, it's on a scale from 1 to 10, it's not good. Now, that doesn't mean there's not going to be some kind of rebound tomorrow. Here's the point. Doesn't matter what kind of rebound we get tomorrow. Doesn't matter how options expiration week ends this Friday. Doesn't matter. This is the kind of technical damage that will have long-term repercussions. And when I say long-term repercussions, I mean, it could be the next 2-3 months. This could be a very enduring high. I don't know. It's, and I don't like putting those predictions out for a couple of reasons. Number one, I don't want folks to get all bared up just because there's a cycle date. Because here's the thing, and if you read our Twitter feed, I mentioned this several times today. Here's the thing about publishing cycle turn dates. Guess what? The institutional algorithms know those dates as well. And I have seen some of the nastiest short covering rallies on days that were cycle turn dates where the market should have gone lower, plus or minus 1 day. Cycle turn dates are always plus or minus 1 day. But the point is, I don't like putting those things out because I don't want to be responsible for somebody reading that and saying, yes, I'm going to get all bared up. I'm going to lay into this thing. And then next thing you know, they rip the thing higher 70 handles. I cannot tell you how many times that happened. And there's a name for that. It's called a cycle inversion. When you get what is supposed to be a cycle turn date and the exact diametric thing happens in the other direction, it's called a cycle inversion. It's a real thing. It's not one of these things where, if a weather person says it's going to be clear tomorrow and it ends up raining all day. It's not that kind of thing. It's simply because the institutional algos know these same cycles. And if they don't want the tape to correct when those cycle turn dates come, they're not going to. In fact, they'll do the opposite very violently. So let's talk about what happened today. I've made the claim many, many times that we offer by far the most accurate algorithms that are commercially available. The only thing that you will find that that's this accurate, and I mean this with all sincerity, is a multi-million-dollar institutional algorithm. It does the same thing. You see this day in and day out. Look, you can't get lucky every day, all right? You can't publish this stuff the night before and nail this stuff every day. There has to be something to it, right? Well, if I'm giving you the same numbers that chart evidence shows you the next day, there can only be one answer, and that is, as I say, these are the same algorithms that institutional algos use. And the black box stuff that people try and sell you, you know, they'll charge you 5 times more than we charge for one metric that may work once in a while. We give you over a dozen algorithmic metrics every single day. So it doesn't matter whether you're a short-term trader that likes to trade in and out frequently during the day. Doesn't matter if you're the kind of day trader that's just looking for those 1 or 2 or maybe 3 really solid trades a day. And typically it's 1 or 2. I mean, you know, 3 solid days. If you're that kind of trader, you're not looking for 3 trades a day. Or whether you're a swing trader, and there's different definitions of swing traders. Some folks, you know, to some folks, swing trading is a couple of days, some it's a couple of weeks, some it's a couple of months. It doesn't matter what type of trader you are. We give you on one screen, and this is just one example. It's not what I wanted to do. Forgive me. What are you doing, knucklehead? There we go. This is one example of the live chart you see every day. Now, there's a lot of stuff on here. Here's the point. On our live chart, the reason we give you all those metrics is because let's say you're a short-term trader. Well, we give you short, intermediate, long-term swing trading. We give you all those metrics. So whatever your trading style is, you can get confirmation from longer cycles if you're a day trader, or if you're a swing trader, you can get confirmation from shorter algorithms. So we give you all that so that it doesn't matter what your style is, whether you day trade or swing trade or high frequency trade, or whether you're an investor and you just want to get an idea what the market direction is likely to be. We give all that to you, and we charge one price. And that's it. So enough with the commercials. That's the part of these videos I hate. So let's get on with it, folks. All right. So these are the Mercury bands that we put out last night. And I mentioned to our members when we sent these out last night, anytime the Mercury bands each individually are very, very important algorithmic levels. But when you get 2 of them that overlap, it's really powerful. So on the Mercury bands data sheet we put out for our members last night, you had overlapping Mercury bands at 69.21 and 69.48. And if we go back to the chart, there you go. And it's not a coincidence that that's right where this regression line came into, which pretty much defined the point where you started this second leg of what happened today. The trigger, and this isn't the exact right time frame, but the trigger on, this is 3 minutes. The trigger on our day trade algo and our swing trade algo was 33.90. So it went up here to 33.95. We were literally short above 33.90. And in NQ, I put out 2 trade recommendations for NQ today, and I mean one of them was 96 handles and the other one was 52 handles, I believe. But It's all there. I mean, we put this stuff out in real time. But let me walk you through how this set up. So these were all the key levels going into today. And there's also a couple of algo levels that were very important on February 20th, because I've been saying for the last week and a half that everything that's been happening the last week and a half is almost a picture perfect analog to February 20th. So over the weekend, when I looked at cycle turn dates, because I don't even look at them that often, I don't. I only look at them when that sixth sense says something isn't right in these algos. And sure enough, over the weekend, there you have it, 180 days. And again, it wasn't 180 days. It's the fact that you have many, many, many shorter day cycles, numbers of days that all happen to overlap at 180 days, beginning with the February 20th. So this is what we put out last night. And this is what we put out tonight. So you had overlapping Mercury bands at 33.75. And where did it, initially it moved down to 59. Now this is a case, like I was just mentioning, where we've got a Mercury band for tonight and tomorrow at 59.27, and you had one of these key algo pivots from February 20th. So we put this stuff out ahead of time. If you're a fan of WD GAN, or you have any interest in WD GAN, what could GAN do that made people think that he had a screw loose? He could tell you the key prices before they traded there. And I am not comparing myself to WD GAN. There is only one WD GAN. There will never be another WD GAN, because what I produce with the aid of computers, he was doing with a piece of graph paper, a pencil, and a ruler. All right. So GAN is the man, always will be. When I bring his name up, I am not comparing myself or Mercury Time Price Analytics to WD GAN. But if you look through some of his stuff, and including some of the really esoteric stuff that you're not going to find on Amazon and every place else, let me give a plug. And this has nothing to do with WD GAN or his publishing company. They don't pay me to say this. If you buy anything from WD GAN, only buy it from WDGAN.com, which is his family's website. Don't buy it anyplace else. Don't. Because you may not even be getting real stuff. I mean, it just, there are so many knockoffs of GAN stuff. And let me say one other thing. I'm not even going to say it. Be careful when someone tells you that they're GAN expert. Be careful. That's all I'm going to say. All right, so moving right along. Let's look at some charts. Now, this is the Saturn GT40 algo. This was just finished up on Saturday. There's two videos on YouTube. There's one that I recorded earlier last week. And the cover image is a black Ford GT40. It's the actual, one of the actual ones that they raced at Le Mans in 1966. When I started recording that video, I meant it to be about 10-15 minutes. It went an hour. So I recorded an updated version of it. It's either over the weekend or Monday, I don't remember. But it's got a picture of a red, I think it's a 2021 Ford GT40. But that's the video. It's shorter. It's 20 minutes. It's more to the point. I showed that to my wife the other day. She said, "What does that cost?" I said, $500,000. She said, "You could buy a house for that much." I said, "Yeah, but I'd rather live in the car." All right, so here's the GT40. Now, what this does is this is third and fourth derivative algos. What you're looking for is peaks and troughs in the purple oscillator, which is the fastest one, and or these two white ones, the solid white one and the dash one. So here you go today. You take the peak of this. So you get this peak here in the purple, and you come down, and then you come back up, right? and then you take that out. This is all a head fake. This is nonsense. This is algorithmic nonsense. It's what I call an algorithmic hook. So when you come back down and you break the price where you would draw a horizontal line off the peak of that, that's 33.90.58. That was your first short opportunity, or your first indicator that a short is setting up right here, right now. Second one is the trough right here. Well, that's at 33.88.42. The third one, as if that wasn't enough, is the trough of this. So what you're looking for again is looking for peaks and troughs in the slope of the fastest algo on here, the purple one, or the white ones. And then you're also looking for places where they cross over. And they're all over the chart. I mean, there are, okay, for example, this level right here goes back to, as a matter of fact, I'm going to show you that in just a minute. There's another neat thing that you can do on here where you don't have to look for peaks and troughs and draw that line. And that is, this is the Saturn trend algo number 1. There's another orange one that's lower than that. That's trend algo number 2. And then you have this cycle, which is nice and slow. And what happens, if you notice here and not here, I mean, this one was a direct hit and it took off. But notice here, what you get when you break these and you recover them, you get this slingshot action. And you had a direct hit right here on the orange one. But take the orange algo right here. You break this hard, and then it comes back through. You get this violent release. And part of that is because, like all of our algos, they are designed to identify bull traps and bear traps. Because as an example here, you get this move down, and I talk about this a lot, recency bias. As humans, we're conditioned if something happens once, it's going to happen again if circumstances look similar, right? So you have this move down, you get a little bounce up to here, and it breaks this orange line. And then when it comes up to the same level, people think, all right, well, here we go. Let's short it again. And no, not going to happen. So let me show you a longer version. And remember this little area right here. Actually, this is the zoomed in. I'm sorry, forgive me. It's been a long day. So right here is what I wanted to show you. All right. So it's also important to spots where these come together. Right here, you have the purple and the white come together. And take that across, and it's right here. This is what gave you that little support for the back test. Where did the back test fail? It failed right at the spot that the two white lines come together right here. If you take where these cross over right there, and again, you take these peaks, troughs, and crossovers of the purple and the two white lines, and then you draw a horizontal line over, and it's perfect. It's right there. And you see these all over the place. Take the spot right here where the purple crosses through the solid white line. Same thing. Let's show you one more. Can we find another one on here? Ah, here we go. All right. Right here, you had the purple algo cross up and through not just the two white ones, but the orange one. And you can take that right across. Bingo. Now, this chart was from the end of the day session. That bad boy broke big time. So let's move on. All right, let's talk about algo regression lines. And like I said at the beginning, we give you so many different algorithmic metrics. It doesn't matter whether you're long-term, short-term, mid-term, whatever term. We give you all these algos for one ridiculously low membership fee. So what you got here? Key algo regression line, key algo regression line. And This algo regression line, I put this in a couple of days ago because what I was looking for is a regression line that would likely mark the top. Now, if you haven't seen any of our videos before, let me be clear about something. We never, ever, ever, ever manually draw lines on a chart, ever. Every one of these horizontal lines is a mathematical formula. It's an algorithm. We run the formula, the computer spits out the levels, okay? When we run the regression line formula, it's the algorithm, the computer algorithm gives us 2 points way, way back, which would be off the left of this chart. And then we plot those 2 points that the computer algo gives us, and then we've got a formula that just extends this right through. So you'll never see anything. Because look, anybody can look at something after it happened and draw a trend line or a channel line or whatever kind of line. Okay, great. You got a ruler and a pencil, big deal. And I know that sounds harsh, but I'm really getting tired of people coming on TV and telling you stuff like, wait till 34.20 to sell. That one was going around the internet today. Well, I have no idea where that came from. Or analysts at big Wall Street firms that come out, oh, I don't know, maybe over the weekend and raise their S&P price target to 3,600. Or somebody who, I'm not even going to go into it. I got to watch what I say. Somebody today who said 4,000. 4,000. Look, there's some really good, very ethical people that will come on those financial news channels and tell you the truth, stuff that's in your best interests. And the other 90% will tell you something on TV while back at the shop they're doing the opposite. And I'll tell you what, I'm a pretty easygoing guy, but I get really wound up when I see people coming on TV in the morning telling you stuff that I know is not true, and darn it, they know it's not true. And so, as I mentioned to our members when the day started this morning, see, we've got a live chart, and you see not this exact live chart, it's a version of this. I've got a few things that I was looking at the end of the day. But you see this all day long. We run this on Zoom. All you need is a free Zoom account with your email. And you see all that stuff. And I'm on the mic all day long. So even though this looks complicated, it literally takes you about 2 days, 3 days, and you understand all this stuff. And we've got tutorial videos. It looks complicated. It's not. Believe me, it's not. But the point I was about to make is this morning, I got on the mic and I let my members know. I said, look, I'm in a real testy mood today, and I'm not angry about anything. It's just some of the stuff I saw on financial news TV this morning. These people ought to be ashamed of themselves. Ashamed of themselves. It ticks me off. Because you know what? There's a lot of folks that are trading with money they can't afford to lose. And I don't mean that in a condescending way, because we all started at some point in trading. All right. But times are tough. And you and I both know that there's a lot of people that are new to this game, and they're trading with money they can't afford to lose. And they're going to believe these idiots that come on TV. While those same people that are on TV saying, wait till 3,400 to sell. They told you to wait till 3,400 to sell in February. It stopped at 3,397. I got news for you. If these people could pick the exact price, they'd be doing what I'm doing. They would show you the charts instead of going on there and spewing hot air. I do this every day. I show you the charts every day. They're on Twitter every day. I don't record a YouTube video in the morning and say, buy, or sell. I show you the chart evidence every day, and I'm sorry for getting worked up. But I know a lot of you that are listening to this are ticked off about this pump and dump crap, as I am. So, without further ado, let's go to the pump and dump chart. Why not? Why not? Now, if you've been trading for a long time or you're into technical analysis, you probably at one point or another have read Edwards and McGee, um, Technical Analysis of Stock Trends. If you haven't read it, that is the original encyclopedia of technical analysis. And by the way, if you were thinking, um, if you were thinking, hey, 3350, why not? If that 3350 level is going to provide a place for bounce, they're going to take out the stops below 3350 first. So it just popped below 3350. Just wanted to point that out. So back to Edwards and McGee. So they show you all the classical charts, and it's really interesting because they what they wanted to do, among other things, is take these chart patterns and figure out what they mean. Think of the mass psychology, the massive discounting mechanism that is the stock market, and figure out, okay, what does an ascending triangle mean, or what does a flag formation mean? Where is the interrelationship between buyers and sellers? What is the interrelationship between buyers and sellers that gives you those patterns? It's awesome. Here's the point. I pulled off the shelf my dusty, worn copy of Edwards and McGee. I couldn't find the pop and drop, the algo hook. Couldn't find it. You know why? Because institutional algos invented this one, folks. And you can find these by having the regression lines that we give you. I mean, again, don't mean it to be a commercial, but some of the best trades come from waiting for these pop and drops and then boom, in both directions. I mean, there's an inverse to that too, just like I was saying before. When you lose these lines and you come back up, you get this slingshot. So you get them both ways. I mean, the opposite of a pop and drop is what you see here, where everyone gets bared up and then they do the opposite. But pop and drop, pop and drop, pop and drop. And today could be the mother of all pop and drops. Now, like this one right here, could it go back up? Absolutely. Could we end the week over 3,400? Heck, we could end tomorrow over 3,400. The point is, how much wealth or how much money that the average trader has got wiped out today because these knuckleheads came on TV this morning and told you buy, 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 buy. They're morons. Stock splits. Give me a freaking break. All right. And I think my wife's giving me the dirty look. I think from now on, if I start one of these videos and I'm in a testy mood, I'll let you know that. Okay, just a couple more charts. This 59 was a key level, and it did not hold. And the reason this 59 is a key level is because you had a Mercury band from tonight's run at 59, and this is not a good thing. This 59 level from February 20th, that was the last line of defense before that chart just really, really, really fell apart. Now look, they can regain that, and if you do, you're probably going to get a pretty decent rally. But and it came down when I first did this chart a couple hours into Globex. I mean, bullseye at that level, and it bounced and then splat. And that is why when you see this type of technical damage, you don't try to pick bottoms. You just don't. Remember, second mouse gets the cheese. When you're trying to find a bottom in this kind of silliness, it's either the third or the fourth or maybe the 10th mouse that gets the cheese. You need a whole lot of confirmation before you start picking bottoms in this kind of nonsense. And we're going to end with this chart. Same thing we were looking at on the live chart. Last time I saw this kind of chart damage in one day was back at the end of January. Started on January 22nd, seemingly innocuous day where the day session started about 33.37, bounced up about 6 handles. They hammered it down to 3,300 and it basically recovered it over the next day or so. And if you go on our website, mercurysignals.com, and you go back and read the market reports that I wrote back in late January and early February, you'll see that chart of January 22nd, which is a Wednesday. And what I wrote back then is that 30 handle move down did technical damage. And at the time, I had folks say, well, what do you mean technical damage? I mean, high to low that day was 30 handles, and it recovered it, in the next day. Because 2 days later, on Friday, on Friday the 24th, the day started at the same price, about 33.37, and then it got ugly. And then you had an ugly open Sunday Globex, and then Monday was ugly. It all started with that seemingly innocuous day. Now, here's what happens. These horizontal lines are algorithms, and they move up every day. Okay. Now, if the market starts really correcting, they'll start moving back down. But algorithmically, algorithms are like if you open up a Swiss watch, all those different gears are all different sizes, but they all have to have very specific mathematical relationships, or the thing's going to seize up and not work. And so it's not a matter of, well, let's plot an algo level every 2 or 3 handles. No, some of these algo levels, and this is 11 algo levels, between 33.78 and 33.90, 12 handles, 11 algo levels. Some of these levels, if you go back a month ago, were 50, 60, 70 handles apart. Have you ever tried doing a high jump, high school track and field? Okay, you set the bar, you start at a level everyone can jump over. And then as it gets higher and higher and higher, eventually it gets a point where the only way you can get over that bar is if you do your absolute best jump, nail the timing perfectly, plant your foot at exactly the right spot. You do your version of the Fosbury flop, right? So what happens is when markets get really tired, all of these algos that are normally significantly spaced apart, they all cluster together in a tiny range. And typically on those days, you get the daily bull-bear pivot really extended about right where the day starts. This daily bull-bear pivot comes out 2 hours. Well, I run it. It's run about 2 hours before the day session opens. We publish it for our members around 8 o'clock-ish. But when you get really extended, 2 things happen. You get a ton of compression in these algos, and you get this algo bull-bear pivot, which, to give you an idea, back on July 28th, it was, I think, 32.28. So you're now about 160 handles higher just for the daily bull-bear pivot. But that's the days that are really dangerous to the downside. Day starts, the day session opens right near where this is. Think of this like a high bar. That's as high as it can go. And I mentioned to our members this morning, bulls better bring their A game, because there was absolutely zero margin for error today. They needed to take this thing directly up and over 3,400 and boom, run all the stops. Because if they didn't, this is what you're going to get, and this is what happened. So if you haven't been to our website, it's mercurysignals.com. I mean, look, here's the deal. You had people telling you back in February, wait for 3,400. Never happened. You had people the last couple of days telling you again, wait till it gets to 3,400, then sell. You have big investment firms on Wall Street over the weekend that raised their S&P price target to 3,600. You had people today saying 4,000. And I'm not going to say they're lying to you, but they're not telling you what's in your best interest. And we do this every single day. Whether they want to tell you the truth or not, I really don't care. I will. So go to our website, if you would, mercurysignals.com. Now, the last thing I want to leave you with, I don't get on these videos and say, join now, rates are going up, rates are going up. Um, there is a pretty significant rate increase that's coming. Um, if not if not September 1st, it may be a little bit early. I don't know exactly the date. I don't make those decisions. Don't want to be part of it. Um, but there is a rate increase coming. Our members, once you're a member, we don't ever raise your prices. Um, there are no contracts. We bill you every 2 weeks. You don't even pay once a month. It's every 2 weeks. You don't like what we do, you know, quit anytime. But we give all of our members a lifetime rate lock. So whatever the rate is when you join, it will never go up. And whatever we add that's new, like the Saturn GT40 algo that we just finished up over the weekend, we don't charge you an extra fee. Any new developments that come out for these ES and NQ algos, not only will we never raise your rates, but everything that's new you get. So I mean, who else does that? And I'll tell you what, there are companies that for one metric that may work or may not work, or sometimes it works or sometimes it doesn't, will charge you $1,000 a month or more. We don't charge you anywhere close to that, and we do this every day, and that's why we have to raise prices. We cannot continue to offer one of the lowest priced trading services on the market and have a trading service that's better than anything else out there. We just can't do it, and we're not going to keep doing it. So we thank you so much for your time. Please check out our website, mercurysignals.com. Always and most importantly, God bless you, God bless your family, and we hope to see you again soon.